You all heard it. Reverse mortgages. What's your first response? All right, everyone, welcome to Living in Greenville, South Carolina. I have a very special guest with me today. This is Bert Carr. He is with Fairway Mortgage, and I'm going to let him tell you all about his experience and his knowledge of what we're going to be telling you about today. We've got a lot to talk about, so I'm just going to let Bert take it away. And welcome, Bert. Thank you so much for being on the channel.
Appreciate it, Tammy. Thanks for having me.
Thank you.
Yeah, we met a couple of months ago whenever I was doing a continuing education class on reverse mortgage. And Tammy has found it to be very useful for her clients. I am a math teacher by trade. That's my undergraduate degree. But for 20 plus years, I've been in the mortgage business and doing reverse mortgage for about most of those years. So there has been some changes in the reverse mortgages over the last 10 to 12 years, and they've just become very beneficial, especially to help realtors handle this high price point right now.
That's fabulous. Now, you all heard it. Reverse mortgages. What's your first response? Reverse mortgage. And that was kind of mine too. But honestly, excuse me, when I heard this class, it was a continuing education class sponsored by the Greenville Association of Realtors. And I thought, well, this is going to be great. I'm going to go find out a little bit more about it. I was sort of surprised it was about reverse mortgages. So we are going to really inform you today. After Bert's presentation that day, I was like, this is an incredible tool for my clients and for myself eventually, I believe. So, tell us more about this, because I think it's called something even different.
Yeah, it's called the HECM mortgage, or the home equity conversion mortgage. Mm-hmm. And basically what it does is answers the simple question of prices are a little bit higher than the seniors expected whenever they just decided to retire. And if you are coming with a budget of $200,000 or $250,000, that doesn't get as much house as it used to.
Oh, that's true.
So we have to bridge that gap. And the reverse mortgage for purchase is a perfect way to do that. And it answers the question of, can I get a $350,000 house on a $250 budget? Can I get a $500,000 house on a $350 budget?
Right.
And so mostly what I do is help inform and overcome the mental hurdles of what people think a reverse mortgage has been over the years.
True.
So, it always starts with the discussion and how we can help. But mostly, we don't want our senior community to have to settle for a neighborhood that's maybe not desirous, maybe not near the family that you want to be. And so we just want to provide an option for that.
Well, and I think that's something that is a great way to approach this, because like I said, so many of us had maybe certain things in mind when we heard the terms reverse mortgage. We've always heard some negative things going on about that, or we've seen the movie stars doing the commercials, but when you really get informed on this, I think you can see that it really could help you and open up the doors. And that's what I've seen with my clients. So I've had many clients coming into the area, wanting to move here, selling their home that they thought might have been their forever home, but now they want to relocate to South Carolina. Fantastic. A lot of people think they're going to come here and get a real deal on housing. And, we're like every other place. Our housing prices certainly went up around 2020 through about 2022. And of course, they go up every year just slightly, which is good. Appreciation. So now how could they use this home equity conversion mortgage? What would it look like? If I'm looking to purchase a home in this area, what is it going to look like for me?
Yeah, so generally speaking, I just like to go through a scenario, right? Because that tends to be the most understandable thing, is an actual scenario. There are very many different ways to apply a reverse mortgage whenever you use it, but the most common way is, let's say you're selling a home from Florida or New York, and you have a budget, and you go into the home buying process thinking, I want to pay cash. That is an advantage, right? You're not going to have a mortgage payment, but what is your budget and what cash do you have left over after you buy a house? And that's important too, because we don't want to drain all of our cash and not be ready for medical emergencies or the breaking down of a car or all of the emergencies that just happen in life. And so what we do is we use that reverse mortgage to either help you buy the house and bridge the gap between your cash and the house price. Mm-hmm. And you never have a mortgage payment. And usually in conversations with people, I'm helping to dispel a few, myths about a reverse mortgage. One is that, the interest rate is outrageous. Mm-hmm. Two is that it erodes the equity in your house, which is not necessarily true. 3 is that you don't own the title to the house, which is definitely not true. And some of the advancements in this mortgage have really made it to the advantage of the homeowner. And that is a non-recourse loan, which means you don't have to pay the mortgage back at all. The land does. And so that's a very important distinction, because after you die and the kids get the house, or if you decide to sell it before you pass away, it doesn't matter. The land is paying it back. You get the equity. And if there is no equity, there's insurance that covers that. So it is a fantastic way to do it and keep your cash or bridge the gap between a loan.
So I want to go back to something you said just a minute ago. The non-recourse loan, you were saying that you never have to pay the house back, that the land pays the house back. Can you explain that a little bit? Just expound a little bit more on that.
Yeah, going through an example, let's say you have a $100,000 reverse mortgage on a $300,000 house, okay? You live another 10 years, maybe the mortgage has built up through negative amortization to like $150,000, and the house price is worth $350,000, okay? Let's just say in 10 years that's the reality. Well, if you pass away, there's $200,000 in equity, and that would go to your heirs. Or if you decide to sell the home, you just sell the home pays the mortgage back at $150,000, and you get the remaining $200,000. But if the case were the other way, if somehow the mortgage was $400,000 and the house value was only $350,000, there is no recourse for any homeowner, whether that be your heirs or yourself, because this is an FHA insured mortgage, which has insurance on it to cover this case. So if the house were worth $350,000 and the mortgage were worth $400,000, well, you can still walk away without having to pay any debts or any of your family members if they were to inherit it. So that's what non-recourse means. There's no recourse on any person. It's only the property that pays back the loan.
I think that is critical for people to understand, because so many people say, oh, they're going to come take the house. They're going to, do this, or they're going to take something from my heirs. And that's simply not the case. They're just going to sell the property and it will pay off the mortgage.
The only time the note is callable is if you were to reach the age of 150 years old. I don't know. I don't know that anybody's ever reached that. So.
Not in a long time. Not since biblical times, maybe.
Right. So our longevity has not reached 150 yet.
That's right. That's right. So, just explaining a little bit more to them, what are some other scenarios that you could see that this could work for?
Well, I mean, we use it. We do multiple of these a month, and we use it in very different ways. Right now, we're working with a gentleman who has a $100,000 mortgage on his property, and his wife just passed away. What happens then is you lose half of your Social Security money. Most of the time, you do, and so he could no longer handle that $100,000 mortgage. Well, no problem. We just did a reverse mortgage, and he no longer has any more payments for as long as he lives in the house. And so that's a common way to do it. But the most common way is, why do people want to move to Greenville, South Carolina, right? Well, probably their family members are here and they want to live close to them. Maybe you want to be next to grandchildren, or just friends that have moved here. It's such a great community. The weather's perfect. It's not busy. When we complain about traffic, Atlantans laugh at us. And so, we don't have the busyness and the craziness of the bigger cities, or even, South Florida in the winter, right? So it's a very good community. And so why do you want to move here? Well, all of those reasons. And how does that happen? Most people are fearful to move right now because they don't know where they're going to go, and they don't know how much it's going to be, and they don't know how they're going to afford it. Well, that's not the case with the reverse, because if you only have $250,000, you can still buy a $350,000 house. Bring your down payment. We'll do a $100,000 reverse mortgage. You'll still never have a payment for as long as you're in the house, and you can be where you want to be and not settle.
It is really remarkable. It really is. Now, something we really need to talk about, of course, is who can qualify for this type of loan. What are those requirements that are there?
Yeah, that's a good question. You just have to be 62 years or older to qualify for a reverse mortgage. You will take a counseling class that's managed by FHA and its authorities. And then there's no cost associated with the reverse mortgage after that counseling class. So all closing costs are wrapped into the mortgage. And then that's pretty much it. As long as you're 62 and you have a lot of equity and you are a homeowner, then probably makes sense to talk to me or someone else about a reverse mortgage, because you just want to know all of your options, really. And, we can certainly handle dispelling the myths, any myths that you may think about a reverse mortgage.
Excellent. And now at 62, what would a down payment look like? I mean, can you give kind of a scenario for that?
Yeah, so that's a good question. This reverse mortgage works on an actuary table. So what that means is the older you are, the more I can lend you as a percentage. So a good number if you're a young reverse mortgage candidate at 62 is probably I can lend you 30% of the house price. So if you buy a $200,000 house, I could lend you about $60,000 if you're in the 62 range. If you're in the 75 or 80% range, then or 80% age bracket, then I can lend you about 50% of the property. So again, the older you are, the more I can lend you. And again, you don't have a payment ever for as long as you're in the home. All you need to do is pay your homeowner's insurance and property taxes and upkeep with the house.
I think it's absolutely remarkable. And then something you said a minute ago, like if you and your spouse are living in the home and then one of you dies, it's not a scenario where, like the gentleman you gave the example of, to where he would have to sell the house because he can no longer afford to pay it. This is just a way that he could stay where he is, because you've already got enough grief with the loss of the spouse.
Yes,
and then,
absolutely.
Oh my gosh, I got to sell the house because I can't afford to live here.
That's right. And one of the most important parts of that is maybe let's do it before the spouse dies. Because if you know you're going to be in this house for a long time, then I would just say, let's do it now so we're ready. And the thing about a reverse mortgage is you don't have to make a payment, but you can if you want to. And so that's something that married couples that feel like they're making enough money now can go ahead and get a reverse mortgage. Now it's all set up. You can make the payments if you want, just like you were making on your existing mortgage. And you're now in a comfort level because, like she said, the grief of losing a spouse and wanting to stay in your house and then having to scramble and do a reverse mortgage, that's another added texture to that makes it complicated. So, we just believe in getting the discussion out of the way so that you have expectations on, what a reverse mortgage can do to help you. The other question I get a lot is, where is the trick? Why this sounds too good to be true. Right. I've heard that from a lot of the realtors when I teach the class as well. And really, because there is an insurance level on a reverse mortgage, the closing costs are a little bit more expensive than a regular mortgage. And so who should not get a reverse mortgage if you're over 62? And I would say if you have not enough equity, you can't get a reverse mortgage. But if you're not going to be in the home for a long time, greater than 3 to 5 years, then I wouldn't recommend a reverse mortgage. A reverse mortgage is made for a senior that is going to live in that home as long as they can. That is when it's perfect. That's when it gives you options. That's when it gives you everything that the reverse mortgage is meant to be, is that senior wants to stay in that house for as long as they can.
That's fabulous. And that really is remarkable. So many of my clients have actually come to me in this exact scenario, and I've had them talk with Bert. And this is something that is definitely a tool that you want to explore if you are 62 and above, because it really could allow you to purchase the home that you want to live in for a long time. A lot of my clients moving here are like, this is it. This is the last home we ever really want to buy. And so some of them are coming into town, with maybe some cash, but it's not quite as much. So they're looking at a very small amount to purchase a house with cash, versus this, they could open up, giving them the opportunity to buy the house that they really want. Because, let's face it, in our area right now, a $200,000 house or a $350,000 house, vastly different.
Vastly different.
Yeah. So one of the things we want to talk about, of course, is when you see new construction homes, you drive by this great neighborhood and on the sign it says homes from the mid 200s. Well, of course, we know that by the time you get done with all the house that you want, basically any amenities that you add, you're probably in the low to mid 300s in a scenario like that. So how would this help in that scenario?
There is a lot of builder inventory. So we do come across this quite a bit because when the resale inventory is a little bit lower percentage-wise, we get a lot of this builder inventory. And so we've been using this quite a bit. And so, when a senior drives through and sees that sign and says, oh, well, my budget is 250 or 300 or whatever the number is, and then they get the awareness that, the house plan that they want, because everybody wants a ranch. And usually the least expensive homes are the skinny 2-story homes. Right. So if you want a ranch, you're going to get a little bit more of a price. But that's perfect for what this reverse mortgage can do for you. And we do them quite a bit with builder communities is if you can only afford 280 and the house comes up to 350, that's a perfect scenario for us to do a $70,000 reverse to bridge that gap. You're getting the house that you want. It's brand new. There's not going to be very much maintenance on it, which is something else that you want as well, I'm sure. And you're not having a mortgage payment, and you get what you want in a great community. If you were to scale down and say, okay, I want a 220 house then I make 250, it's probably way out in the suburbs, or you're probably going to sacrifice quality in some sort of a way. So the reverse mortgage for new construction is a real winner for sure.
A great option, it sounds like, definitely. Now, there's a couple other things I remember you taught in that class that day about some things that the homeowner needs to be able to pay for. You've got to make sure they've got a certain amount of income coming in and all this good stuff, because I think taxes will still be their responsibility, all that good stuff, right?
That's right.
Can you talk a little bit about that?
Yeah, when I do say that you don't have a mortgage payment, which means you don't have a mortgage payment, your principal and interest of the loan is actually adding on to the principal, and you're not responsible for paying it. But you are responsible for paying taxes, insurance, and just general upkeep of the home. And, that's one of the responsibilities that you would have probably if you had a mortgage or not. You're going to want those things. So these are expenses that you would normally have, and they're not any more expensive because you have a reverse mortgage. They're the exact same. And you don't escrow for those with a reverse mortgage. So you are in charge of paying the annual taxes, at least in Greenville, South Carolina, the annual taxes paid at the end of the year, and your annual homeowner's insurance policy.
One more thing I remember you talking about in the class as well. There's a way to use this even as a different financial tool. Do you want to talk a little bit about that as well? One
of the ways that we use this is to just create a line of credit that grows and has options. So here's the scenario. Let's say that you have a $300,000 house and you own it free and clear, and you are worried about running out of money or worried about needing some sort of line of credit to move money around. Well, that's certainly possible with the home equity line of credit with a reverse mortgage. And so what we do is we just put a line on your house of $100,000 in this case. Let's say the house is worth $300,000. We put a $100,000 line, and it grows at the same interest rate. So if the interest rate is 6%, that line will grow compounded 6% per year. And so theoretically, after you've lived in the house for 6 or 8 years, the line will be like $150,000, $160,000. And so you can draw on that line at any time. And then when you draw on it, you just pay interest like you would anything else. Or I shouldn't say you pay interest. The interest just adds on to the house. But it certainly gives us options for whenever catastrophes happen, right? The most common reason a single goes into bankruptcy is medical collections. And so you also use it for living inheritances, right? Like if you want to take the whole grandkid crew on a Disney cruise, you can do that with this money. So it just gives you options, and certainly this is one of the things that I say sets you up for if one spouse dies and you start to lose that spouse's income, and you can take a little bit out of this reverse and stay in the house. So that's another option, another use for sure. It's
incredible. It seems to be a really good, versatile option that could help a lot of people, whether you want to buy a home, whether you're in your current home and you want to open up this line of credit on it. I mean, there's so many options. So it doesn't have to be that you're relocating to Greenville, although we'd love to have you here. But even if you're here already and you want to take advantage of this, it could be.
Yeah, absolutely. And, I do regular mortgages, and I've done those for many, many years, but this is much more complicated than a standard mortgage. Standard mortgages, you just put some money down and we give you the rest. This is much more complicated than that. And so you just need to call and talk, and let's work through your options. What do you need to be over 62 and have a good amount of equity, more than 50% equity in your home? And that is a convenient thing for those people, those homeowners that are in their home now, because we've had a huge equity event in the last 5 years.
Sure.
When you're looking at, like you said, from 2020 to now, many seniors have gained maybe in upwards of 40 or 50% in equity. And so that really has propelled them into qualifying for a reverse mortgage and giving them a break financially. or giving them options financially, which is important.
I feel like it's an incredible opportunity for anyone who could qualify for this. And if it works for you, when you're talking with Bert and it makes sense, if it's not going to make sense for you, Bert's going to tell you. I mean, if it's going to work for you, fantastic. If you feel like it's not going to work, I mean, you all can work that out. Definitely do what he was saying. Give him a call, talk with him, schedule a time so that you can figure out if this is something that could help you make your move to Greenville, South Carolina.
Another thing is, we're in my office here in Greenville, South Carolina, and I usually meet with all the family members that have questions about it. The unfortunate part about most reverse mortgages is they're originated in a cubicle in Chicago or San Diego with some of the larger companies, and it's a really complex product. It's something that we want to clearly explain to all the beneficiaries and everyone involved. And so I do encourage a meeting, or I send people books. Like, we want you to know every single thing about a reverse mortgage before you commit and do it. But when you do, it's a magical financial tool for someone over the age of 62, for sure.
That's fantastic. And when I first was at his class that he taught at the Greater Greenville Association of Realtors, I was astounded. I was blown away. And this is something that I immediately talked with my parents about. And here's the thing that I'll say to you. My promise to you, of course, is that I will take the best care possible of you as my client. If I wouldn't do something for, wouldn't offer this to my parents, I certainly wouldn't offer it to you. That's why that when I heard this, I, have gotten to know Bert. I understand this product a little better. I still let him explain it, but, just knowing the incredible versatility of this home equity conversion mortgage, the home equity basically line of credit too, or convert. It's basically the same thing. I immediately talked to my parents about it. I mean, I would highly recommend it for my parents. I hope that they are going to choose to do this when the opportunity arises and when it makes sense for them, because, and they already love the concept of it. So we will be. Yeah. So if I'm going to offer this to my parents and even consider using this, of course, for myself eventually, then I'm certainly going to offer it to my clients. I wouldn't offer you anything I wouldn't do myself. So I think this is an incredible financial tool in many, many ways. All right. And a couple more points about this is, do you have to be a homeowner, or if you had a lot of cash on hand, is this an option for you? Can you speak to that, Bert?
Yeah, absolutely. You don't need to be a homeowner currently. You can use the HECM to purchase a mortgage. That's the home equity conversion mortgage. And so again, the same thing. If you're buying a $300,000 house and I can get you a $100,000 reverse mortgage, then you only have to bring $200,000 to the closing. So you're basically able to buy $300,000 worth of power of a house purchase at $200,000. And so in either way, you don't have a mortgage. So that's the key. And so oftentimes people just want to do a reverse mortgage in order to preserve the rest of their capital. So it's very flexible. You don't have to currently own a home, but you should be able to bring a lot of the equity into it.
Fantastic. Well, are there any other points that you want to talk about that maybe we haven't covered so far today?
Don't have the negative feelings about the product until you've spoken to someone about it and how it could apply to you. Because there's a lot of misinformation out there about reverse mortgage, or a lot of just feelings about it. So just give us a call. We'll see how it can apply to you.
I cannot thank you enough for your time today, Bert. It's been an incredible journey just to get to know Bert and to hear this astoundingly good option for many people. So could it be the right option for you? Only talking to Bert could let you know that. So definitely give Bert a call. Give me a call. I can certainly connect you. And I really appreciate your time and your expertise today. I'm so excited to let more clients talk with you. So thank you so much again.
You're welcome.
What an incredible time we've had today talking with Bert Carr. He is an expert in not only the home equity conversion mortgage or the reverse mortgage, he's also an expert in just any other kind of mortgage you could imagine. So if you need a mortgage, this is definitely someone you want to talk to. I'll put his contact in the links below, of course, in the comments. And if you have any questions, please feel free to reach out to me. I am so excited for you to talk to Bert about this, but I'm also so excited to see you living in Greenville, South Carolina.